So today we're going to talk about how to create your overall portfolio of savings and investments. Usually I just talk about my crypto holdings and crypto portfolio, but I've had requests to talk about it. So not just crypto, but everything. I have stocks, real estate, cash. Hopefully you have cash right now, right? What is the best portfolio? A lot of people are asking. And so I'm going to show you my portfolio, but I also want to explain that what is right for me right now at my age, with my income, with my time frame, is different than what you may have in your situation and at your age. And so I really want to explain what you need to be thinking about in general to create your savings portfolio, because it's not just about, well, what do I think is going to go up? Because it's not that easy. There's no, in other words, you may think, oh, geez, Dave, he's so smart. I'll just copy his portfolio. Well, it might not be right for you. So let me just give you a peek at mine. And we're going to talk about it, but before I want to talk about how I got here. So this is what I have right now. Now, fortunately, and when I say what I have, this is not exact, but so cash 55%, I think that's a good place to be. Even more would be fine right now, right? My ETH 10%, tokens, those are all my other cryptos. And then, before I get to this, let me just help you understand, because even the word portfolio sounds sort of fancy. What does that mean? Start with this. What is your income stream and your expected income stream? Because, so, in general, you have money coming in or you don't have money coming in. Then you save money in case something happens. Like, what if the whole world stopped for 2 months? Do you have enough money to cover you? Right? That's a question. People usually say you need to have enough savings in case something goes terribly wrong. Well, here we are. For those who didn't listen to that advice, you now know why you need to have savings. And I'm very conservative. Now you may think, oh, I'm off in the Wild West here with crypto investing in Ethereum. But in general, I'm pretty risk averse in that I like to have enough cash for a whole year saved, so that if the shit hits the fan, I don't have to worry and panic. So how much cash do you have coming in? How confident are you that that cash will keep coming in? How much do you have saved? What is your monthly spending? And you want to have enough cushion, so if that money stops coming in, based on your savings, you have enough money left. Now, when that is all finished and you have money left over, that is effectively money that you do not need in the short term. That is when you can start thinking about investing. And so that's why, first of all, you have to run those numbers for yourself to determine how much money you can afford to put into your longer term savings. Okay? Now, within that, now you have that longer term savings, and what works for you? So, keep in mind too, that it's also not just about, oh, I love Ethereum. If it's a 5-year hold, I'll just hold it for 5 years. For someone like me, I feel now, I hope, at 50, almost 52 years old, I can make that prediction of my needs over the next 5 years. If you're in your 20s, you don't know shit. You haven't seen, if you're in your 20s, right, from 10 years old to 20 years old, okay, maybe you've been really paying attention to markets, but most of you not that closely, and if you don't have skin in the game, you don't know. Not to mention, you don't know what life has in store. You may think, oh, I'm going to be single my whole life and I live this way and that way, and you meet a girl and she wants to buy a home, and all of a sudden, those long-term savings you want into a home. Or you've got an awesome job and you think you got it all locked down, and you realize and then you lose it's very unpredictable at your age, just because life is difficult to predict. And when you don't have that much experience, it's difficult, okay? So if you're young, having a long time frame is good to have a long time frame. My point is your odds of being wrong are very high. Even in your 30s, difficult. So age, experience, your ability to predict is important. Now, okay. So let me explain to you my portfolio, how I got here, and why this is not necessarily the best portfolio. This is what I have. For example, real estate says 10%. I own a condo in fucking Montenegro from my previous marriage that I can't sell. I'm assuming it's worth that amount is 10%. I don't really want it there, but it's there. It's real estate, right? So I'm not saying 10% is the best amount to have. It's just, this is sort of what I have, and you have to look at, and that's part of your portfolio can be, you have things that just, it's a long-term investment, and now you wish you weren't in it, but you can't get out of it. You have to look at everything, okay? So, in cash, I'm well positioned here. Am I a genius? Well, thank God I sold the house I owned, closed in January. If it didn't, I wouldn't be in this position. This number would be huge, and I wouldn't be making this video because I'd be embarrassed. So, there's a little luck involved. Sold most of my Bitcoin January. I don't know if that was luck, right? That for cash. So again, that's why that's high. So I look smart. Thank you. Going over 10% in any one investment is pretty, is pretty risky. So, ETH at 10%, I feel good about it. Tesla, wouldn't mind it higher. But when it went to 900, I took some money off the table. At 923, I sold some, right? And I'm like, well, I want to get more back. If Tesla was at 10%, I'd be happy, but I don't want to buy right now because of the market. Let's talk about what's going on in the market. Whoa! I hope your seatbelt. Everybody's in crypto now, right? If you're talking about volatility, if you've been watching my channel, you're in crypto. 5% moves every day. That's how we live, right? Well, everybody's living that right now. Even the U.S. Treasury bond, which is supposed to be the base layer, the stable base layer of the entire fiat financial system, the U.S. Treasury bond, moving 5-10% a day. This is not stable ground. So this market, and we've seen what happens when shit falls apart. Remember 2018? I remember 2018. I remember many bubbles. And at the beginning, it falls off a cliff, and you're down 30%, and you go, wow, that was pretty bad. Maybe now it's fine. And the shit goes on for at least 6 months, a year. We've seen this happen. We are not at a bottom. I can't believe our stock market, and not just because it's only been a few weeks. There's no stability. You're not seeing stability like the base layer, and there's fires everywhere. People are panicking, scrambling for dollars. The Fed is printing money to fill the holes. The virus is not under control yet. Things are still shut down. In order for a sustained rally to happen, there needs to be like a base that we can start building on. We don't know, never mind predicting the future, we don't know what's going on today. We barely know what's happened in the past month financially. We're trying to get our arms, trying to understand what's going on with the virus. And we may even have this virus under control in a couple months. But the financial pain, barely is not measured, not understood, and we have an economy, a financial system that is not built for durability. We can barely handle any shocks. You have companies with a lot of debt, you have people without savings, and now all of a sudden nobody has savings. You have 2 months with nothing. Everybody's bankrupt. That has to be settled. It has to be resolved. I wouldn't worry about this market running away from you anytime soon. But keep an eye, and the Federal Reserve, how much do they need to print? That's the other thing to watch. It's not always fundamentals. If the Fed prints enough money, gives it to everybody who's bankrupt, that causes a lot of problems. But if there's an investment, I'll make a simple example, right? Tesla, great company. I love it. Imagine the Fed printed $1 trillion and gave it to Tesla. The investment would probably be pretty good right now, right? So you have to pay attention to that as well. But the Fed has only printed, their balance sheet has only expanded a little more than $1 trillion in the past few weeks, only. They need that balance sheet. In 2008, the Fed balance sheet went from $1 trillion to $2 trillion, in a couple months. That was a big deal. Wow. Then over the next decade, it went to $4 trillion. Now we're at 5. When that starts going, when it's over 10, we can start thinking that maybe there'll be a bottom for a while until they need to bail everybody out again. And I don't know the numbers. It's a day-by-day thing. I'm not going to predict and tell you when it's good time to buy today. I don't know. But I can tell you I'm not a financial advisor, but I will tell you, I'm not anxious to put my 55% cash to work right now. So, back to the portfolio. Now, and tokens, those are my other crypto investments, my non-ETH, right? I like Kyber. We've talked about that. That's other videos. This real estate, real estate can be a great investment, but not all real estate is created equally, right? Now, if you own a home that you live in, and if you like the place, that can be a great investment, and you're getting use from it. A stock, it just sits there on a computer. But if you own a home and you're living in it, you can enjoy your investment. Now, and if you have debt, I have no debt. If you have debt, you know what the safest investment is for you? Pay off the debt. If you have, and I don't care, it's low interest, you're only paying 3% a year. Well, that means you're losing 3% a year. How about in this environment, you are guaranteed to save 3% a year. So pay off that debt. If you have bigger interest rates right now, cash is king, and the opposite, debt is death. Pay off debt if you have that. And if and again, real estate, there's different, there's so many different options. I was just talking to a friend about Sam Zell has this, what is it? EQC is a ticker. It's for office space, but he's in 90% cash. And Sam Zell, one of the greatest real estate investment guys, has a fund, this EQC, which, my friend who's run the numbers says if it gets to, I think it's at $28, you're basically buying all the cash for $28. So there's almost no risk at that in general, right? And Sam Zell is super smart. So that's real estate, right? That's a guy, but you're investing in office space, which, listen, everyone's working from home right now. There's risks, but that's different. And then there's buying a home, and then it's a lot of different types of real estate. I don't know where I'm going with that. Okay. So then we've got, let me talk about this then. We got BRKB. Berkshire Hathaway. one of the greatest investors of all time. And some of us here, us crypto fans, oh, we don't like Warren Buffett because he says Bitcoin is rat poison. I'm not a big fan of rat poison. I'm not a big fan of Bitcoin either. And I love Warren Buffett and I listen to everything he says very closely, but he doesn't get crypto. That's fine. It doesn't. There's smart people who do like crypto and whatever. But I like, if you want to go for safety and diversification, now he owns 80 companies and it's just value. It's like shit that isn't going to go away. There's Corona, Schmarona. People are still going to buy Coca-Cola, right? People are still going to, what else do they own? I don't know. You know, I'm sure his businesses are getting hurt, and that's another thing. I wouldn't start investing till I listened to what Warren Buffett has to say on this matter. And his his annual meeting this year, where no one will be attending, it's going to be remote. Boy, is that going to be interesting. I can't wait. I want to hear what Warren Buffett has to say. If he says now is the time to invest, we'll listen to him. In 2009, I remember like an op-ed in like the Wall Street Journal. He wrote a piece in I think it was February 2009 saying, hey, listen, it might still be early, but now is the time to get into the market. Fucking timed that well. And we saw him buying even before that. And you know, he's smart. Anyways, I trust Warren Buffett with my money. When I invest in anything, especially with stocks, crypto's a little different because if you're in a truly decentralized thing, but in these, you know, Berkshire Hathaway, Tesla, I look at it like if you have a stock, who's the CEO? Do you trust this person with your money? What if they walked in the room and you said, here's a suitcase of thousands of dollars. Take it. I trust you. Would you do that? If you wouldn't, then I wouldn't buy the stock. And I think it's a good visualization. I trust Warren Buffett. Now, I like diversification. So S&P 500 ETF. Why not buy that? And it might be great. And in fact, Warren Buffett says it's great. I have a little problem with it because I always worry about what if the shit really hits the fan. And what is the S&P 500 ETF? Well, if I have E-Trade, so E-Trade has a promise from their broker dealer, you know, for this ETF who has an agreement with their, I don't know, whatever it is, the distributor. There's like all these layers to finally the company that holds the stocks, I guess, that back this ETF, and they're loaning out those stocks to multiple people. If there's a scramble to settle who owns what, this ETF is going to be in trouble. Maybe it never gets to that, but I don't like that. As opposed to if there's a scramble for that sort of thing, I think Warren Buffett will take care of his people. He cares. Nobody cares about you. Whoever's running the ETF, they'll take all your money. That's a very tail risk thing, and that's my own little, you know, I get a little crazy like that. S&P 5, but the thing about Berkshire Hathaway, you know, and for us in crypto, you don't like him because he doesn't like crypto? Well, that's a good reason to like his investment. He's a diversification away from your own mindset. I like that. Everything Warren Buffett buys are things I would never buy. But he's smart. He's good. It's not like every investment that I like are the only great investments in the world. There are other great investments. So find people like him who will find those. And another thing is, now you see that when we see stock prices falling, and I don't think it's done, and you know, you hear all these deals, this company, it's so cheap now, it's so cheap. And I think about that, wow, maybe I should research. Listen, that's not my strength to study the balance sheet of some giant corporation and get into all that and compete with all these other people who have been studying stocks for 30 years. That's not my game to find those bargains. And you know what? If there's great bargains, Warren Buffett will find it. So I own Berkshire Hathaway so that he can find the bargains for me. Okay. And again, and Tesla, a lot of people say, hey, that's a risky thing. Sort of like ETH. but I understand. I happen to think I understand Ethereum and Tesla. So that's why I have a big position in it. If you don't just go on, you love me and you think I'm smart and I like Tesla, so you're just going to buy Tesla. The problem with that is, first of all, maybe I'm wrong. Okay. Second problem with that is, if I start to see that I'm wrong, I'm going to sell it before I tell you. And not because I'm an asshole, but just because listen, I love you all. Thank you for watching. But I got kids. I got things to do. If I need to sell it, I'm going to sell it. And I'm sure with Tesla, okay, I've talked about it a lot. I would make a video. But not right away, and maybe I won't make a video. You need to have your own understanding and belief system. And I remember in 2019, when they were talking about Tesla, oh, it's horrible, it's going to go bankrupt, Elon Musk should go in jail. Didn't bother me, because I believed and I knew why I believed. I didn't just like it because some YouTuber said he liked it. I had beliefs, and I was able to withstand all the criticism I was taking for owning Tesla. If your only conviction is, oh, Dave likes it, when everybody starts beating you up and telling you stupid, you're going to sell. So you need to have more conviction than that. Okay, ARKG. So I love what's going on in genomics. If you've heard of CRISPR gene editing, very exciting, very new. But this is way out of my field of expertise. I can't start analyzing gene editing companies and who's going to be successful. This ARKG is a genomics fund. This woman, Kathy Wood, who runs it, I like her. I feel like that's a good bet. Now, I don't know if I trust Kathy Wood enough. I don't know enough. So for me, 3% isn't enough. If you're a genomics researcher, right, or you went to college and this is for that, and now you're working at some company that's doing it, you look into this ARKG and you're like, shit, these are all awesome. I really believe in it. Well, maybe you could have a bigger percentage than me, right? So again, it depends. And then I have this thing here. It says bond. I mean, I have I gave a loan to somebody who I believe will pay me back. They've been paying me back. It's a 10% interest. And again, that's the thing. I didn't go out and say, geez, I have to have a 10% loan. It's just this opportunity came in front of me a while back. I had cash. I thought it made sense. This loan goes away, and whenever it's finished, they're finished paying me off in another year. It goes away. I don't know that I'll replace it with anything. It's just these opportunities come, so I have it. I didn't think I need a 10% loan, but honestly, 10% in this environment, right? And even a year ago, I was like, 10%? And I really think I'm going to get paid back here? That's good. I liked it, so I took it. But it came to me, right? I wasn't searching, oh, I need a bond that pays 10%. Like, I don't know where you would even find that. I don't know. So, I think that's it. So, I had a lot of requests for what about overall portfolio. That's the best advice I can give you, I think. But if you have questions, put them in the comments below. We can talk more. Glad to help. Let me know your thoughts. Stay safe.